Manufacturing accounts in the general ledger. The following is a summary of the manufacturing accounts in the general ledger. So we have our balance sheet accounts, which we know consist out of our assets, our liabilities, and our equity accounts. Then we have our nominal accounts, which consist out of our income accounts and our expense accounts. And then we have our cost accounts, which consist of our direct material costs, direct labor costs, factory overhead costs, sales and distribution costs, and administration costs. And then we have our final accounts, the trading account and the profit and loss account. So the nominal accounts, it's the accounts organized for factory selling and distribution and administration. All the nominal accounts is consolidated in 5 cost accounts. So we move from the nominal accounts to the cost accounts. And then we move some of these cost accounts, the ones related to manufacturing, in fact, to the balance sheet account section. In other words, the raw material stock, the work in process stock, the finished goods stock, and the consumable store stock. And then we have our sales and distribution costs as well as administration cost accounts that is transferred to the final accounts section. So in general, the process is moving from nominal accounts to cost accounts, and from cost accounts to balance sheet accounts or final accounts, depending which accounts are involved. So with that said, let's focus on the manufacturing stock accounts. The easiest is to imagine the stock accounts in a manufacturing business as 3 rooms. Firstly, the raw material stock room, where the raw material is kept. Secondly, the work in process room, the factory where the product is made. And then the third room is the finished goods room, or also referred to as the display room, where the finished goods are displayed or stored for customers to purchase. So the raw material is taken out of the storeroom. When we receive raw material, once we purchase it, we store it in the storeroom. Then it is taken out of the storeroom and taken to the factory. Next, the products completed in the factory are taken out of the factory and taken to the display room. Labor. Salaries and wages are paid to different employees for different reasons. Not all salaries and wages relate directly to the production process. Certain forms of labor relate to indirect manufacturing costs, treated as factory overhead costs. Some salaries are an operating expenditure and are recovered from the gross profit. The total salaries and wages paid is debited in the salaries and wage account in the general ledger, because we know expenses increase on the debit side, so that makes sense. Direct labor, wages paid to factory workers directly involved in the manufacturing, are periodically transferred from the salaries and wages account to the direct labor cost account. This is a cost account, as we've seen in a previous slide. From there, it's carried over to the work in process account. As we also seen in a previous slide, the work in process account as an asset account. Indirect labor, salaries paid to workers not directly involved in manufacturing, but still working at the factory. For example, factory security, are periodically transferred from the salaries and wages account to the factory overhead cost account, as we also seen in a previous slide. This is a cost account, the factory overheads. Operating expenses, salaries and wages paid to people responsible for the administration and management of the business, for example, the secretary, are closed off and transferred to the administration cost account at the end of the financial year. This is regarded as a period cost. Operating expense, salaries and wages paid to people responsible for the sale, distribution, and marketing of the product. For example, sales representatives, are closed off and transferred to the sales and distribution account at the end of the financial year. This is also regarded as a period cost. Overheads. When costs are incurred, various different expense accounts are debited. For example, water and electricity account, insurance account, maintenance account, etc. The part of the cost allocated for manufacturing is then periodically transferred to the factory overhead cost account. So only certain portions of these cost accounts are transferred to the manufacturing or the factory overhead cost account, only those that relate to manufacturing. The factory overhead costs are then allocated and transferred from the factory overhead cost account to the work in process account. So it's from the cost account to our asset account, work in process, as we've seen in a previous slide. The following chart shows how water and electricity is allocated and recorded in the general ledger. Water and electricity paid is debited in the water and electricity account in the general ledger. As we know, expense accounts increase on the debit side. Water and electricity for factory is then transferred to the factory overheads cost account. So in other words, we will credit the water and electricity account and debit factory overhead cost account. Now that it's in the factory overhead cost account, on the debit side, we will credit factory overhead cost account to get rid of it and debit our balance sheet account, work in process account. So we went through the process from nominal account to cost account to asset account. The water and electricity for office will also be credited. So remember, we had the water and electricity debited. We credit a portion of it to the factory overhead cost account. Now we are focusing on water and electricity for the office. So instead we will credit the water electricity account, in this case with the administration cost account. So for each credit we have a debit, so we will debit administration cost account. And that is in periodic costs, so therefore we will now credit administration costs and debit our profit and loss account. So in this case we went from a nominal account again to a cost account, but finally instead of a cost account to the profit and loss account, or the period cost account. Allocation of manufacturing costs. The flow and allocation of manufacturing costs may be summarized as follows. Allocation of manufacturing costs. So we have the materials, the overheads, like our rent, our maintenance, our insurance, depreciation, and labor. So we have factory overheads in terms of our overheads. And then we have our indirect materials that is also transferred to factory overheads. Similarly, we have indirect labor that's transferred to factory overheads account. From there, our factory overheads cost account is transferred to our work in process asset account. The direct materials is transferred also to the work in process account, as well as the direct labor is transferred to the work in process account. And then our work in process asset account, from there, whatever we have completed is transferred to the finished goods account, also an asset account. Completed products are physically moved from production into storage. This movement is recorded in the general ledger by transferring the costs allocated to those products from the work in process account to the finished goods account as shown above. So, recording cost of sales in a manufacturing enterprise. We have seen that when a trading enterprise sells goods, the bank or debtors control account is debited with the selling price. Because we either receive money is an asset, assets increase on the debit side, or money is owed to us, which is also an asset, assets increase on the debit side. The sales account, our income account, is credited with the selling price. So we debit bank or debtors control, credit sales. In addition, the cost of sales account is debited with the cost price of the goods. So it's an expense account. We know expense accounts increase on the debit side. The trading stock account credited with the cost price of the goods, because we know trading stock is going to decrease. Assets decrease on the credit side, so therefore trading stock is credited with the cost of sales. So trading stock credited, cost of sales debited. In a manufacturing enterprise, a similar procedure is followed, except here the finished goods account is credited with the cost price instead of the trading stock account. So we still debit cost of sales, but now we credit finished goods account. So the only thing that happens is that trading stock is now replaced with finished goods for a manufacturing environment. Closing transfers in manufacturing accounts. As with any other types of business, The nominal accounts of a manufacturing business must be closed off at the end of the financial period. The following flowchart illustrates the route of the closing transfers. So we know from a previous slide, our main sections are the nominal accounts, the cost accounts, the balance sheet accounts, and the final accounts. So in our nominal accounts, we have expenses for administration, like the telephone salary of secretary. We have expenses for sales and distribution, like the commission, fuel for delivery vehicles. Then we have the raw materials issued. And we have the wages paid to the factory staff, the ones directly involved with manufacturing. Also we have the sundry expenses for manufacturing. For example, water, electricity of the factory. So our expenses for its administration we transfer to our administrative cost account. Our expenses for sales and distribution to our sales and distribution cost account. Our raw material issues to our direct material costs. Our wages directly paid to factory staff to the direct labor. Our sundry expenses relating to manufacturing overheads. So these are all cost accounts. So we move from nominal accounts to cost accounts. Then the administrative costs is a period cost. So we move it to our profit and loss account, which is a final account. Similarly, sales and distribution costs, period costs. So we move to our profit and loss account, which is a final account. The ones that relates to manufacturing, like direct material costs, transfer to work in process, which is a balance sheet account. Similarly, direct labor, we transfer to the work in process account, again a balance sheet account. Similarly, manufacturing overhead, transferred to work in process, our balance sheet account. And then work in progress, from there, all the products that we finish, we transfer to our finished goods balance sheet account, also an asset account. And then the finished goods that we are selling, we remove from finished goods and transfer it to our cost of sales, which is a nominal account. And the cost of sales we transfer to our trading account, which is a final account. Similarly, the sales we transfer to our trading account, which is a final account. And then the difference between sales and cost of sales in our trading account, we transfer to gross profit, which is a profit and loss account, or we transfer the gross profit rather to our profit and loss account, which is our final account.